Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. So the Australian dollar picked up fresh support after the CPI reading released today confirmed inflation remains sticky, while the headline price hold around 3.8 year-on-year percent and the trend mean steadied at 3.4 year-on-year for a second month, extending the run above the RBA's target band and leaving the softer 0.2% month-on-month core outcome largely irrelevant to the broader inflation story. On the US side, though, lingering tariffs uncertainty and a cautious risk tone have capped dollar strength despite a lift in consumer confidence, keeping the Aussie now compressed and waiting direction. But it's finding momentum into the European session and therefore looks back towards that top side of the highs where we saw profit taking, that is around 71.40.50 area. We could see resistance just around there or touch high around 70, but overall the MACD is still negative. So I feel this is going to be a failed rally close to a bull trap and see the market turn back lower to 70.5 and reassess. But there is still much talk, given the CPI numbers, that the RBA may talk about or even look to maybe hiking in the next meeting in March. Turning to the euro, well, the market's still a little bit mixed, but still seems to be weighed on the support, even though we have seen a bit of interest when it comes to the RSI breaking just above the midway point. We may see a rally onto 118.35 to 118.65, but I feel given the shape of this pattern here, the downside risk is still lurking to the lows of 117 before the bullish or the strong rebound to 122 to 123, which is the broader call. Looking at dollar yen, it breaks through that level of 156 briefly and then finds a bit of profit taking. MACD is still underneath the 0 point when we look at the MAC and also the signal, and therefore could see this recent rally fail and still looking to the downside from a rejection above 156 down to 154 to 152. Sterling also finding a little bit of momentum after posting this inverted hammer. Still a little bit cautious of any bullish call as of yet, just in case we see another down test back towards the region of lows of 134 and a cap around 135.5. Or having surged above 5,200, the market pulled back, but still hovers around this region of 5,200. I wouldn't rule out that we see another test to the recent highs around 5,250 and maybe eventually see a bit of profit taking. And as we get this MACD starting to really increase, then we are looking up towards 5,002 to 5,500. And the call for this year still 6,000. Oil, well, a little bit mixed here as the market is looking for direction around that $66 mark. We could see a rally that is on towards $68 and any weakness likely to be limited. Well, that's a wrap. Thank you for joining me. And as always, look out the intraday report. And I hope you enjoy a great start to the day.